bring up the chart if you would. This is really advanced stuff on the Bloomberg. I don't show this too often. This is razzle dazzle on the Bloomberg. And all you need to know on euro sterling is this is the time duration of the bet out 1 year. Here's the bet, stronger euro, and here's the volatility call. And there's a one-way bet on stronger euro against sterling. And Nick, what's so interesting is the chart on euro dollar does not look like this. There's a real unhinging here of currency dynamics, aren't there?
No, very much so. And again, you can only think of sterling through that Brexit prism. So if you think of it there, you've got a huge amount of uncertainty as you go out 1 year. Of course, that coincides with the culmination of the Brexit negotiations in a year or so's time. If you think of euro sterling, though, it's really going to be a market of euro strength. And the key there will be when we get the ECB pricing rate hikes. So if you look at euro dollar, you know, that moves something like 10% this year. Euro sterling's probably half of that. So the euro stronger by about 5%.
Are we at any point, Nick, where it's about price and yield? Francine, I think about yield up, which I think means price down. Nick, are you managing for a bond bear market?
Very much so. And the epicenter of that bond bear market is Europe. When you look at the level of yields there, when you look at the monetary policy setting, it's set for an emergency. Clearly, Europe is not in an emergency now. Probably for the third year running, it could well outperform in economic growth terms the US.
What happens to the Bank of England? What if they, how many times do they hike? Can they hike this year?
So probably twice. And again, when you look at the UK, you've got underlying economic growth, 1.5%, something like that. The risk is that stronger. And the other impact this year could well be bits of wage growth coming through. And you always get that lagged impact. You've got unemployment in the UK at 40, 50-year lows. And in theory, at least, we should see a bit of wage inflation this year.